Oil trading barely above $60 right now. Saudi Arabia made some of the biggest cuts in years to its flagship oil price. We got more from Helima Croft, head of global commodity strategy at RBC Capital Markets.
Similar to what we saw basically in March of 2020. Remember when they could not reach an agreement at the OPEC meeting, and essentially OPEC said, if you can't reach an agreement with Russia, we're going to put barrels on the market. This time it's a more restrained action, but it is a warning to countries like Kazakhstan, to Iraq, to Russia to a certain degree, that if they do not get their compliance better, if they not come into conformity with what they have pledged to do, then starting next month, OPEC is going to be bringing forth more production. So we do have a meeting on May 5. That will be an important meeting. They will look at the production levels of these three countries to see if they've managed to bring their production down. And I think they can then either pause that decision, go forward with that decision, reverse the decision. So it is essentially a 30-day warning about what is to come if these countries don't reverse course on production. I think also some key members of OPEC, countries like Saudi Arabia, wanted to disabuse other producers that they were so wedded to higher prices that they were prepared to continuously prop up the market and to allow other countries to continue to cheat. So again, a warning shot. People I've spoken to have said this was not done to please President Trump, but President Trump is obviously very happy with the price action. Treasury Secretary Bessent was on the Sunday talk shows in the United States talking about lower prices. The real question, I think, when it comes to the U.S. is what type of calls are U.S. shale producers now thinking about making to the White House, because this is not good for their overall economic outlook.
How do you see, what do you think has caused the recent plunge in crude oil prices? The common interpretation is that the market is worried about a global economic slowdown and a plunge in oil demand, all of that arising from the tariff assault from the White House.
100%. You asked me what is the underlying driver of this decline in prices. It is a concern that we are going to see a significant contraction in global demand. But again, you layer into that as well. At the moment where we have heightened demand fears, we are also facing the prospect of additional supply. And so again, you can say the primary driver is a demand concern, but then the OPEC decision, I think, really exacerbated the price action. I think it caught a lot of market participants by surprise. And so now they're having to contemplate. Some are thinking, are we back to 2014? Are we back to 2020? I think it is a different OPEC strategy. Again, the barrels won't be coming till next month. And there will be a meeting on May 5 where they review the decision. But again, what you don't want if you want higher oil prices is a contraction in demand and then additional supply coming on at that precise moment.
You mentioned the U.S. shale producers a moment or so ago. Circle back there. What you say? The lower prices are not good for the U.S. shale producers, and that they may be making their feelings known to the White House.
I mean, we certainly saw this. We had a ringside seat for this in March 2020 when you had that OPEC meeting, end without an agreement, and then you had the Russia-Saudi price war in the middle of then what was the largest demand contraction in history due to the COVID pandemic. And you had U.S. shale producers, really being afraid that they would go out of business. And it's a little bit of a playbook of what we're seeing now. Initially, President Trump was out there saying in March 2020, this was great for the U.S. consumer. And then shale producers started calling the White House saying, President Trump, American energy dominance dies in a much lower price environment. And so, again, I've always been sort of interested in how this dynamic between U.S. producers and the White House would evolve, because President Trump on the campaign trail was talking a lot about wanting oil prices in the 50s. His advisors had talked about oil prices in the 50s. They now have, at least for today, oil prices now in the 50s. But we kept saying this was not a price that U.S. producers wanted. This was not something that was viable for the overall goal of American energy dominance. And so again, I think it's going to be if this price action continues, if we go lower, I do think there'll be calls from the producers, potentially to the White House, to say, we may not be able to, you have your tariff policy, but there's also an OPEC policy. Can you try to find us some relief on these fronts?
One thing politicians in any country love to see are lower gasoline prices. Are we seeing those now, or will we see them very shortly in the U.S.?
I mean, it has a bit of a lag, but again, certainly if this price, if we stay in these ranges, yes, U.S. consumers will be paying, lower gasoline prices. If we move into the low to mid 50s, yeah, you'll be talking retail gasoline prices, in the $2 range, $2.50 range. But again, that's, there are the other worrying signs about the global economy as well. So consumers will have to weigh that up. But again, a stated goal of this, administration has been the prolific growth of U.S. shale. They've really talked about wanting American energy dominance. And again, the current price outlook is not compatible with American energy dominance. And so something potentially has to give. You can't have everything everywhere all at once.